Trading in commodities are subject to market risks. Please read disclaimer available on the screen carefully. Hi, good morning everyone. In today's session, we will talk about the crude palm oil. Prices of crude palm oil in the domestic market have gained about 15 to 20% last month, and in Malaysian and Indonesian market, we have seen a gain of around 20% last month. And this year so far, in the Malaysian market, we have seen prices surging more than 70%, and in Indonesian market also similar pace of gain we have witnessed so far. Domestic market, we have seen a gain of about 50% so far this year, and heat is pretty much on, whether it's Indian market or international market. Now, talking of the domestic market scenario, mounting vegetable oil supply concern after Indonesia banned processed oil export took the prices of CPO in the domestic market to a record high. Prices are now above 1600 per 10 kg, and the way it is moving up, we believe this trend of escalation in the prices will continue, as we should not be forgetting that India is the largest importer of palm oil, which accounts for 70% of the world's import, and it is followed by the China, which accounts for 14% of the total palm oil import in the world. India is not able to meet the domestic demand, as we all know, and to meet the domestic demand, India every year imports around 13 million metric tons of edible oil. And if we talk of palm oil share, which is 60% of the total edible oil imports, in quantity term, we import around 8 million metric tons per year. And this import is basically meat from Malaysia and Indonesia. Indonesia accounts for 45% of the total India's import of palm oil, and rest is from mainly Malaysia and little bit from other destination. And we should not be forgetting that Indonesia's recent step will certainly halt the supply of 3 lakh to 3 lakh 50,000 tons of palm oil, from my own words. And as we all know, ever since the Russia-Ukraine war, India's monthly import of about 1,80,000 to 2,30,000 tons of sunflower oil has already halted to almost nil in April, and that would be the situation in May also. Then the shortage of CPO supplies will lead to a steep escalation in the prices in the coming weeks. Now, talking of the international market performance, CPO BMD Malaysia futures prices exploded last week, especially on Wednesday. Prices had a upper circuit of 10% after Indonesia banned processed palm oil export starting from April 28 until further notice to ensure sufficient domestic supply at affordable price. As we all know, Indonesia accounts for 59% of the world's production and 58% of the oil exports. And if we take an average monthly export number, then it comes around 2.5 million metric tons. Due to this step, certainly we will have a reduction in supply by about 1 million metric tons to 1.2 million metric tons per month from Indonesia, and certainly it will exacerbate the global supply tightness situation, especially when we have a 30% lower crop of canola from Canada. We have 28 million metric tons to 38 million metric tons lower supply of soybean from South America, and we have already sunflower oil export hurting due to ongoing war between Ukraine and Russia. Then certainly we believe that this situation will be alarming for those nations who are actually mainly dependent on oil imports to meet the domestic demand. Looking forward, we are going to see firm price trend in the month of May, and certainly it will be hurting customer pockets. This is it for the day. Have a nice day. Hope you have liked our video. Don't forget to subscribe and like our channel.